ones will like to make these little short posts or short memes. And it's unfortunate because many times, especially is this true with investing and trading, what's actually in the meme is like verifiably wrong. It's not a subjective opinion. It's not what a person believes about a market, which can be subjective and might be right or wrong. No, it's something wrong. It's just flat out wrong. You can see an example of it with that conversation that Rob and I had on developing yourself as a trader in quants and calculus. And it's funny because we often note like the synchronicity of the universe after we recorded that podcast and we were producing it and editing it down. This meme came out. If you don't know calculus, give up trading. This is what it takes to be a successful trader. Which is just flat out wrong. That's just demonstratively false. It's not an opinion. It's just false. I just saw another one recently. God made silver and gold. Man made dollars. Which do you trust? Well, personally, man made airplanes. Man made elevators. Man made cars. Man has made computers. Are we not supposed to use airplanes and elevators and cars because man made them and God didn't? Should I not use them? And we make fun of them. The whole point here is stuff like that comes out and everybody just sort of makes fun at them. And rightly so to some extent. Sometimes when you put stuff out in the social ether, well, part of being human is realizing that social constructs are negotiated. You don't just get to say something. It's a negotiated contract, and you will instantly come under peer review, so to speak. In other words, like we were saying, bad ideas get out in the ether and they are, shall we say, peer-reviewed in the social construct of social media. And it's just, no, that's false. I'm sorry, but you're wrong. And that's good because people can then see both sides of an argument, right? There's a problem there, though, and it's a trap. And especially is this true with sort of the world of finance and trading. Now, I'm going to bring in another concept I heard recently, and I really like this. Somebody referred to it as social media abusers. And I thought, wow, I like that term. You know, people who abuse social media. They're generally wild. They're usually wrong. They're quite egotistical. And I don't think we need to delineate too much of what I mean by that in the realms of investing, in the realms of finance, in the realms of trading, about what we mean by social media abusers, right? I think we know what I'm talking about here. FURUs, right? Fake gurus. Some are fraudsters. Some really want to sound smart in front of other people. Like, look at that whole post, right? You need to know calculus in order to be successful in trading. If you don't know calculus by middle school, just give up because this is what it takes, right? Is that for some sort of feeling of grandiosity? And what's funny is they showed a sheet and it wasn't even, everybody's like, that's not calculus. I mean, what's it for? The likes? I don't know. And then obviously there's the Dunning-Kruger effect, which I talked about in the past in previous iterations I've had in social media. They get overexcited about a few profits. And now that I have a few profits under my belt, and they may not even have reached what I believe is one iteration in short-term trading, and they get overexcited, and now it's my turn to mentor somebody else, because I look up to this guy, and so I'm ready to mentor. No, you're not. Or I've seen this one, they're in a combine. I have a lot to say on that in the future. I view many of those as a scam, and I will delineate my thoughts on that in the future, but many of them are, I'm just going to be honest, it's just my opinion, they're a scam. But I've run into this, right? I actually ran into someone. We were trying to fix something we saw on a piece of software that we had pulled apart was wrong. It's not like a chart indicator or something like this. It's more nuanced and rarely used by retail traders. I'll put it that way. And we were contacting the folks and say, listen, this isn't calculating correctly. I even came up with a 3-page paper on the correct calculations and demonstrating like your software is not calculating this correctly. And if we're going to use your software, we need it to calculate these equations correctly in order for us to do what we're going to do. And we were met with the first level help of, I'm not making this up. Oh, it's the math is right. I did it myself. And we're telling you it's not. And we even compared it to other software programs that we got on a temporary basis. It's like, look, they did it this way and it came out like A. They did it this way and it came out like A. They did it this way and it came out like A.
You did it, and it looks like a Dali painting. It doesn't resemble the data at all. And here's our mathematics, and it also agrees with these 4 other examples that we've given you. So we've sort of cross-referenced the results. Well, listen, I worked for, and they named, and I've traded for, and it was a particular, how do I put this? Because there's proprietary trading now is so differentiated, and it does not mean what it used to mean. But it was a prop outfit that I view as just sort of a scam. I've got a lot more to say on those in the future. Prop has changed dramatically from what it once was. It's just a junk outfit. It just is. And it's like, I used to work for this junk outfit, and therefore I'm telling you it's right. And they wouldn't help us anymore. And it's like, all right, well, I guess we're not using your software. Do you see the ego? Right? Do you see the ego? And it's like, and if you were such a successful trader there, then why are you working like first level support for our technical issues for your software? I mean, as we're trying to solve a rather involved issue, like something's not right here. And we were showing them references regarding like articles and white papers that had been written on how this is done, and they just wouldn't listen. Just all of these ideas that are in the ether regarding investing and trading that are just wrong. And then people get these grandiose ideas about themselves and will not retreat from what is a demonstrably false idea. I'll give you another example. The other day, I'll throw it up here. I threw up a chart of some data just for discussion's sake, right? Social media, with GTC Traders, you throw stuff up. The algorithms like to see, they want to see consistency. So I threw something out there. I just pulled a sheet off of data. We have very, very simple data. It's just simply SPX. It's a carryover from the old days. So when we had the SP, right? But anyways, it's a simple SPX or SPOOs, month of close to close in basis point change since 2003, right? So SPX month to month since 2003, the close month to month. Then the standard deviation on that, and that's what this, the square root of the dispersion variance, right? And it showed something I feel is pretty startling. It's very simple data. It's a very simple look at volatility. The SPX sigma close to close since 2003, month over month. Just those 2 inputs. I mean, I had to do it based off of the percentage change, and it's showing this constant upward spike in sigma. And what I said was like, listen, I've got my thoughts, and I've shown this to other teams, quantitative teams I know around this. I've sort of like slid it over, and it's like, hey, what do you guys think about that? What's going on here, right? I've got my ideas, but no, how hard is it to prove causation, right? And so I'm interested in either getting feedback or maybe learning something, or maybe somebody knows something that I don't know. Who knows? Maybe some way I calculated it incorrectly, though I don't think I did. But we keep on seeing these increasing spikes. In 2008, just to give you some sort of concept, like that graph goes back to 2003, excuse me. In 2008, we saw month-over-month spikes that were like 10.3% or 10.32%, 10.76%, 17.05% at their worst. And we hadn't seen anything like that. And then in 2010, we saw like 8.71%. I told the data sheet, hey, just highlight anything that's over like 8.5%. So then in 2010, we got an 8.71, an 8.74. In 2011, we jumped back up to 11.72. In 2015, we saw an 11.39. In 13.17, a 16.82. A 16.82, right? In 2011, we're back up to like 2008 numbers. Do you see a pattern both in the increase in the volatility and the time? In 2016, we got a 13.50. In 2017, we got a 9.48. In 2018, a 15.05, then an 11.06, then 11.97. Then in 2018, we got a 21.70% and a 27.26%. Now, it's not differentiating, right, between upwards volatility, upside deviation and downside deviation. It's just deviation. It's just vol. In 2019, we got 21.29%. That's vol, that's exceeding 2008, 11.94%. This is all before 2020 hits. I don't have an answer. I've sent this to some firms and some quant teams. Everybody has a thesis. I have my thesis. And I'm just interested in listening to other people's thesis of what's going on here, right? But there's the problem of causation. You know, I've mentioned that. I have thoughts. What are other people's thoughts? But how do you prove causation without spending way too much money on it? Regardless, I threw this out into just some venues for that reason, just for some responses. Maybe I can learn something. Wow. There was one response. No offense, guy, but it seems like you're the only one asleep at the wheel. We all know this. And then he posts a linear chart with a kicker event. That's my name for it. You know, why do we have logarithmic charts, right? Why do we have logarithmic charts? Is because you get a kicker event or over a long dispersion of a large amount of data, and that's why we have log charts, right? It was a linear chart with what I call a kicker event, and anybody familiar with why we have log charts understands what I mean by kicker event. And then says, see, we've all known about this increase in volatility since 1997. What do I do with that, right? It's like, again, no offense, but we've known about the need for logarithmic charts on kicker events over large amounts of data since what? 1610? The year 1615? Somewhere around there. And then I get like, why is this guy trying to sound so smart in front of everyone? I'm the one asking for input as to like, what do you think? I don't know. I've got an idea, but I could be wrong. See, therein lay the problem. First of all, Dunning-Kruger is not just about people who think they're experts and they have very little knowledge, right? In my previous iterations, 10 years ago or whatever it was, 9 years ago, in the social media spaces, I talked about Dunning-Kruger a lot, and it's sort of become something popular to talk about in terms of cognitive biases. But Dunning-Kruger is not just about people who think they're experts and have very little knowledge, and they're overestimating their knowledge base. It's also about people who have been in a field for a long amount of time, and just by the sake of time in the field itself, they've accumulated a lot of knowledge. And they assume everyone has that sort of knowledge base, and they discount their own expertise. That's the flip side of the coin of the Dunning-Kruger effect. But at times, if you're the guy that's constantly not trying to prove a thesis, but just going around and correcting all of these, well, that's not correct, and that's not correct, and that's not correct, your ego can start to take a hold of you. I mean, look at what we talked about in the last stream of consciousness. I guess that's what we can call these, just stream of consciousness videos, right? You know, all my success on the macroeconomic front and dispelling so much nonsense that's out there, which is quite frankly easy to do, you know, in social media with investing and trading with people who are new. It's, like I said, it's playing dodgeball with a bunch of second graders, all right? But what does that lead to? I am this. I am XYZ. Don't you know who I am? Wow, look at how dumb they all are. It's a trap of ego. So what counters that? Well, I'll tell you what. Go out into the institutional fields and start encountering truly brilliant people in the asset management world. Go talk to truly brilliant people in finance and at institutions. It'll solve that ego problem real quick. Go talk to someone who is maybe related in the field but not doing what you're doing. Go talk to a PhD in mathematics, and they've specialized in quantitative data analysis and finance. Trust me, anything I've thrown up here, trust me, I'm like the special kid that needs help in the back of the class. That ought to smack the ego out of anyone. But then you'll get people who's like, oh, that brainy stuff, you can't compete, who cares about that? Well, I want to learn. I don't know about anybody else, but I want to get better and I want to learn. I try to learn from them. That's why I took this, and I was like just sliding it over to a couple of people I knew at a couple of firms, and it was like, hey, what do you think's going on here, right? I'm the trader guy. And I'll tell you something. A lot of people are in coding teams and have quantitative mathematics degrees. They've specialized in quantitative analysis of financial data. They're not necessarily traders. Traders is very much a discretionary skill. Sometimes we use the word discretionary trading, and people think I'm talking down about discretionary trading as, you know, that's not quantitative. So I'm not. That's my skill set. You know, discretionary trading. I'm sorry, but for anybody who feels differently, but it is gambling. It's an unknown event in the future, and taking risk. That's gambling. So people who have specialized skill in quantitative data analysis, quantitative financial data analysis, they're not necessarily traders, right? They may associate with me as like, hey, I never thought about it that way. Oh, okay, cool. That's how you guys do it. And I can't hope to compete in their field. But the whole point is everybody can learn from each other. Like, the ego is a trap, and you really should avoid it. I have seen guys come into companies and constantly want to one-up everyone there with their experience and knowledge. Well, you know who I am and my experience, and this is what I've told my people in the past. Pal, who are you? Like, who do you think you are? It starts that instant. They're on that instant ego trap, and constantly trying to one up everybody to the point it just got nauseous. I know in the one company, like, nobody could stand the second they started interacting with him. It just I was doing stupid jokes to just try to break the tension because he just wanted to one up everyone about everything, whether it's climbing a stupid hill. They got to climb a taller one. It was just ridiculous. So I've come to some conclusions, as I was saying before, as I've aged. You may be, or I may be, particularly talented in my field or your field, great track record, talk to other brilliant people in other associated fields. Don't compete. Right? Don't compete. Just be grateful you have those access to those sort of people. People are also sort of, I heard Jocko Willing talk about this, and I was like, man, that's perfect. I love that. I'm going to repeat it here, but he's the one that said it. People are generally crazy. They don't emotionally detach. They are led by their egos and their emotions. And some of them are like genuinely crazy. It's a problem society has right now. I'm not poking fun. I'm actually very concerned. I encountered a kid who legit was trying to say that his trading was, when I say kid, I think he's like 28. His trading was based off the quark realm and could reach into the human genome. He talked about FBI informants trying to steal his records. I mean, that's an extreme example, but in general, again, I'm going to refer to a normal distribution curve, your general population. It's not something to poke fun of. It's a legitimate problem. Society literally has no solution for this problem. We, and when I say we, I mean humans, we suck at it. We used to lock those people away. If they drifted too far down that distribution curve, and that ain't right. I mean, it made life great for the rest of us, but hell for them. Absolute living hell for the rest of their days. So what do? You let them out of these sanatoriums or institutions, and how do you handle it? No one has a clue, really. That's not funny. It's not ego. It's a serious, serious problem society has. I've heard this said elsewhere, and I really appreciated the insight. Society is becoming more and more and more complex. So you can't poke fun at people that maybe have an IQ of 83. How do they live? How do they progress in a world that is becoming more and more complex to live in? And then you encounter the mental illness problem, right? But even just coming up the distribution curve into all sorts of complexities, we have no idea how to handle that. But you encounter them, and boy, do you encounter them investing and trading. So as I was saying, getting back and pulling this back to the idea of what counters my own ego, associate with other very talented people who are smarter than you are, and that will give you some humility. People are generally crazy for a variety of reasons. Have no expectations on people. I didn't say bad expectations, just no expectations on people. That's what I'm stealing from Jocko. Just have no expectations from them. Not bad, and when they build a relationship and you build trust, okay, that can be built, but generally, that way your expectations don't get smashed. You don't feel betrayed. You don't have bad expectations about them. You just have no expectations. And lastly, I detach a lot more nowadays. Just learn to emotionally detach. Andrew Huberman, lean backwards, take a deep breath and maybe a couple more deep breaths. Exhale slowly and just emotionally detached. I mean, people loved, and I mean loved. And I have already received requests for those old Dan Holy Gospel hours where I just rant. It's like a Sam Kinison explosion of comedy rage. And I've already gotten requests for that. But I gotta tell you, as I've aged mid-50s, I've just learned to detach way more. I might have 30 years to go if the Lord doesn't take me first. I just want to focus on being humble, learning from others, trying to get some interaction going to see what I can learn from others, because man, ego can quite literally be a killer. It has quite literally killed people. And if it doesn't go that far, it can ruin relationships if it doesn't kill you. It's a trap. But that's just been some of my thoughts on the topic as I sort of delve back into interacting in the social media sphere, and has simply been a stream of consciousness. Thoughts are good until they're canceled. And they have been just that. Just our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.